Auditing Theory Chapter 3, PS 300, Planning and Audit of Financial Statements. Planning an audit involves establishing the overall audit strategy of the engagement and developing an audit plan. Preliminary engagement activities. The auditor shall perform the following activities at the beginning of the current audit engagement. Number 1. Perform procedures regarding the continuance of the client relationship and specific audit engagement. Number 2. Evaluate compliance with ethical requirements including independence. And number 3. Establish an understanding of the terms of the engagement. Planning activities. The auditor shall establish an overall audit strategy for the audit. The overall audit strategy sets the scope, timing, and direction of the audit and guides the development of the more detailed audit plan. The establishment of the overall audit strategy involves: number 1, determining the characteristics of the engagement that define its scope. Number 2, ascertaining the reported objectives of the engagement to plan the timing of the audit and nature of the communications required. Number 3, considering the important factors that will determine the focus of engagement team's effort. Number 4, considering the result of preliminary engagement activities and, when applicable, whether knowledge gained on other engagements performed by the engagement partner for the entity is relevant. And the last one, ascertaining the nature, timing, and extent of resources necessary to perform the engagement. The auditor shall develop an audit plan that shall include the description of the nature, timing, and extent of plan risk assessment procedures as determined under PSA 315. Number 2, the nature, timing, and extent of planned further audit procedures at the assertion level as determined under PSA 330. And number 3, other planned audit procedures that are required to be carried out so that the engagement complies with PSA. Changes to planning decisions during the course of the audit. The overall audit strategy and audit plan shall be updated and changed as necessary during the course of the audit. Direction, supervision, and review. The auditor shall plan the nature, timing, and extent of the direction and supervision of the engagement team members and review their work. The nature, timing, and extent of the direction and supervision of engagement team members and review of their work vary depending on many factors, including size and complexity of the entity, the area of the audit, the risks of material misstatement, and capabilities and competence of the individual team members performing the audit work. The auditor plans the nature, timing, and extent of direction and supervision of engagement team members based on the assessed risk of material misstatement. Documentation. The auditor shall document the overall audit strategy and the audit plan, including any significant changes made during the audit engagement. Additional consideration in initial audit engagement. The auditor shall perform the following activities prior to starting an initial audit. Perform procedures regarding the acceptance of the client relationship and the specific audit engagement. Communicate with previous auditor where there has been a change of auditors in compliance with the relevant ethical requirements. PSA 315, identifying and assessing the risk of material misstatements through understanding the entity and its environment. The objective of the auditor is to identify and assess the risk of material misstatement, whether due to fraud or error, at the financial statement and assertion levels. Number 2, through understanding the entity and its environment, including its internal control, thereby providing a basis of designing and implementing responses to the assessed risks of material misstatements. The auditor shall perform risk assessment procedures to provide a basis for identification and assessment of risk of material misstatement at financial statement level and assertion level for classes of transactions, account balances, and disclosures, to provide a basis for designing and performing further audit procedures. The auditor shall identify risks through the process of obtaining the understanding of the entity and its environment, including relevant controls that relate to the risks, and by considering the classes of transactions, account balances, and disclosures in the financial statements. Assess the identified risk and evaluate whether they relate more pervasively to the financial statements as a whole and potentially affect many assertions. The auditor shall relate and identify the identified risks to what can go wrong at the assertion level, taking account of relevant controls that the auditor intends to test. And the auditor shall consider the likelihood of misstatements, including the possibility of multiple misstatements, and whether the potential misstatement is of a magnitude that could result in a material misstatement. Risk assessment procedures by themselves do not provide sufficient appropriate audit evidence on which to base the audit opinion. The risk assessment procedures shall include the following: inquiries of management and other within the entity, analytical procedures, observation and inspection. The auditor's understanding of the entity and its environment consists of the understanding of the following aspects: industry, regulatory, and other external factors, including the applicable financial reporting framework, nature of the entity, including the entity's selection and application of the accounting policies, objectives and strategies, other related business risks that may result in a material misstatement of financial statements, measurement and review of the entity's financial performance, and internal control. Internal control. Internal control is a process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of an entity's objectives with regard to reliability of financial reporting, effectiveness and efficiency of operations, and compliance with applicable laws and regulations. When obtaining an understanding of controls that are relevant to the audit, the auditor shall evaluate the design of those controls and determine whether they have been implemented by performing procedures in addition to inquiry of the entity's personnel. Components of internal control. Control environment. The control environment includes the governance and management functions and attitude, awareness, and actions of those charged with governance and management concerning the entity's internal control and its importance in the entity. Elements of control environment. Number 1, communication of enforcement of integrity and ethical values. Number 2, commitment to competence. Number 3, participation by those charged with governance. Number 3, management's philosophy and operating style. Number 4, organizational structure, assignment of authority and responsibility, and the last one, human resource policies and practices. The auditor shall obtain an understanding of the control environment. As part of obtaining this understanding, the auditor shall evaluate whether: Number 1, management, with the oversight of those charged with governance, has created and maintained a culture of honesty and ethical behavior. Number 2, the strengths in the control environment elements collectively provide an appropriate foundation for the other components of internal control, and whether those other components are not undermined by deficiencies in the control environment. The entity's risk assessment process. The auditor shall obtain an understanding of whether the entity has a process for: Number 1, identifying business risks relevant to financial reporting objectives, estimating the significance of the risks, assessing the likelihood of their occurrence, and deciding about actions to address those risks. The information system, including the related business processes relevant to financial reporting and communication. The auditor shall obtain an understanding of the information system, including the related business processes relevant to financial reporting, including the following areas: the classes of transaction and entities operations that are significant to the financial statements, the procedures within both IT and manual system by which those transactions are initiated, recorded, processed, corrected as necessary, transferred to the general ledger, and reported in the financial statements, The related accounting records, whether electronic or manual, supporting information and specific account in financial statements as they are used to initiate, record, process, and report transactions. This includes the correction of incorrect information, how information is transferred to the general ledger, how the information system captures events and conditions other than transactions that are significant to the financial statements, the financial reporting process used to prepare the entity's financial statements, including significant accounting estimates and disclosures, and controls surrounding journal entries, including non-standard journal entries used to record non-recurring unusual transactions or adjustments. The auditor shall obtain an understanding of how the entity communicates financial reporting roles and responsibilities in significant matters relating to financial reporting, including communications between management and those charged with governance, and external communications such as those with regulatory authorities. Control activities relevant to the audit. Control activities are the policies and procedures to help ensure that management directives are carried out. Examples of control activities include those relating to the following: authorization, performance reviews, information processing, physical controls, segregation of duties. The auditor shall obtain a sufficient understanding of control activities to assess the risk of material misstatements at the assertion level and assign further audit procedure responsive to the assessed risks. Monitoring of controls. Monitoring of controls involves assessing the design and operating of controls on a timely basis and taking the necessary corrective action modified for changes and conditions. The auditor shall obtain an understanding of the major activities that entity uses to monitor internal control over financial reporting, including those related to those control activities relevant to the audit, and how the entity initiates remedial actions to deficiencies in its controls. If the entity has an internal control function, the auditor shall obtain an understanding of the following in order to determine whether the internal audit function is likely to be relevant to the audit: the nature of the internal audit function's responsibilities and how the internal audit function fits in the entity's organizational structure, and the activities performed or to be performed by the internal audit functions. The auditor shall obtain the understanding of the sources of the information used in the entity's monitoring activities and the basis upon which management consider the information to be sufficiently reliable for the purpose.